Got it. This is live streaming. Check the live stream. Make sure that they're on.
Please wait. The webinar will begin soon.
We haven't even started.
Oh, thank God. Have you started it?
No, I'm starting it now. I'm starting it now. I'm starting it now.
Say 3, 2, 1.
Done. Starting. Chat. Everyone to host and panelist. Cool.
Just make me host.
Whenever you join.
Yeah.
Hello, everyone.
Recording in progress.
Yeah. Hello, everyone.
Hello, everyone. Just leave. Can you just put hello in the chat? Yes, fantastic. Just to make sure that
Awesome.
we can make sure that the audio and the video is working.
Host. Yeah. Lovely.
1 second.
How's everyone doing today?
Fantastic. Good afternoon, everyone. 45.
Okay, so we've got 35 people so far. I think we are going to wait a couple more minutes to have everyone joining. I hope everyone's had a fantastic trading week so far.
How's gold news been treating you today?
Yeah, been extremely volatile this week. I don't know if you guys have seen the Japanese yen pairs as well as gold. We've seen a lot of volatility in the market and banks intervening with the prices and stuff.
It's been a roller coaster.
So it's been a roller coaster.
Yes.
What you'd like to see, pretty much.
Yeah, exactly. 100%.
So when you have a lot of volatility, guys, you get a lot of opportunities. When the market is technically dead, moving sideways, you don't really get these sort of opportunities. So I hope everyone's has been able to trade profitably. So today's session, we will be discussing risk management, because I have seen a lot of mistakes from a lot of traders, and that is what we will be discussing today. Because if you are more familiar with risk management, you'll be able to kind of trade in a proper way. We don't want people, breaching their accounts frequently and always buying challenges. You want to actually, pay for a challenge once and have that challenge serve you for the long term. So to make sure that everyone can hear us and everyone's here, type in the chat, hello, thumbs up.
Hello. Cool. Fantastic. Yes. How are you both doing? Matthew, we're doing both of us are doing great.
Awesome.
Thanks for asking. We're seeing a lot of engagement. This is fantastic. Thank you so much to everyone.
Yeah.
Yeah, fantastic. Okay, so should we
yeah. So guys, let's start today's session, risk management. So when I first started trading, my risk management was all over the room. Basically every trade that I would enter, it's a different lot size. Every trade that I would enter, either very, very tight stop losses where I don't give the price room to go against me. And then I end up, getting stopped out every single time. I started actually thinking that the market is against me. So, which is bad for your psychology, because when you think there's someone against you, you're not going to trade with clarity. And then I've realized over the years, after I've started adjusting my stop losses, choosing, bigger targets, having smaller lot sizes, but more room for my stop loss, I realized that I was always wrong with my stop loss placement. So there's a misconception in the market where if your stop loss keeps getting hit, that there's someone out there looking at your trade specifically and they want to take you out. That is, it can't be like further from the truth. So when you think, whenever you place a trade, and if your stop loss gets triggered or you get stopped out, that is simply you being wrong, and you just have to accept it. With trading, you're going to have trades where you lose and trades where you make profits. So when it comes to stop loss placement, this is something that we will be discussing today. We will be discussing how you can calculate your lot size using our platform and using the tools that are available to you. We are very big on risk management. We want everyone managing the risks properly in order to have longevity in the market. If you don't have good risk management, you're technically going to blow up one account after the other, and that is going to lead into so many losses in the future. So to start with, I will be sharing my screen with you guys. Just give me access, please.
Yep, there you go.
Yeah. And also always remember that when you're trading, everything is technically priced in before you place your trades. So if your trades go to your stop losses, it is literally, even if you were not in that trade, your trade was going to reach that price regardless of you being in the trade or not. At the end of the day, you are trading with millions of people on earth. There are banks, institutions, countries doing exports and imports, a lot of money getting pumped into the markets on a daily basis. So if your stop loss gets triggered, it is literally bad stop loss placement. And you also don't want to place your stop loss way too high where you're taking on massive risk. So as long as you have a good, risk parameters, you understand how to do your own technical analysis, and then you follow the same parameters in every trade, you're most likely going to have longevity in the market. So I will be sharing my screen with you guys, and I will show you basically where you can place your stop losses, how you should look at the markets, how you should analyze them. And then we can go with different scenarios that you guys have been going through, discussing risk management a little bit further, and then we'll see where that leads us. Please confirm with me if you can see my monitor. Everyone, let's see the chat.
Yes.
Type in yes if you can see it.
Fantastic.
Brilliant. Okay, so the yeses are coming through. All right. So to start with, let's say you are going to trade gold as an example. So first of all, you have to find out what type of a trader you are, whether you are a scalper, where you speculate over the shorter time frame, or a day trader, where you speculate, on the 1 hour, 30 minutes up to the 4 hours, and then you hold your trades for the entirety of the day, or whether you are a swing trader or a position trader. Swing traders typically analyze the markets on the 4 hours, the 1 day, even the week, and they tend to hold their trades from a week up to 10 days, sometimes 2-3 days. Position traders are basically investors in the market. So they typically hold their trades for a month up to a year. So whenever you find out what type of a trader you are, and then decide that for yourself, what works best for you with your strategy, with your analysis, then you can actually understand what risk parameters you can take. So to start with, let's say gold. For me as a trader, I'm a day trader. So I typically hold trades for the whole day. And then before the rollover period, I close my trades, avoiding any swap fees. And then I call it a day, start over the following day. So as you guys can see, so this is a funded account. I did not place any trades on it yet. But to go to the chart, we've got the 1 minute. So as a day trader, I analyze the 30 minutes and the hour. So for example, right here at this level, we can see that the price is actually ranging. We're not going anywhere with this. So by just looking at it, we have a massive downtrend. And I'm going to touch on that point a little bit later. We have a massive downtrend and then followed by this sideways movement, potentially could either go up or down. We have no idea. But if we focus on this and draw an imaginary box, so if we use 2 horizontal lines, here is horizontal line number 1, the top of it, and we go to draw another horizontal line down here. So you can be profitable in a buying position and a selling position, especially on gold over the past few days, because we've seen a lot of moves to the upside and a lot of moves to the downside. What type of a trader you are determines how you are going to carry on that risk. So let's say you basically saw that the price bottomed right here, and then you saw this candle basically to the upside, another like trying to create a low. It did not go as low as before. And then you decided to buy right here. So you bought, you went all the way up here. You saw that there's some resistance, price got rejected and it went down. So you took profit up here. So when the market is ranging, you just draw two horizontal lines, an imaginary box. You can do it imaginary, or you can just look at the chart and analyze that there's a range going on. So every time you bought when the price hit this level, you would have profited. So here's one trade, here's another trade, and here's the third trade. Every time it went up there and you sold, you would have also went in profits. Here's one trade, second trade, and the third trade. And that is a ranging market. So when the market is ranging, what you typically want to look out for is a break above this box, and then a good break, not a fake out where it just breaks a little bit and then drops right back down. Because you can see that it happened right here as a fake out, but then it went instantly in the direction it was going for. And then here it tried to do that again, but it did not really go outside our range. And then it dropped all the way back again. So what you typically hope for is the price breaking above this level and then retesting this level that is acting as resistance, now turned into support for a continuation to the upside. Vice versa, you would expect that the price would drop below this level and then retests again, basically an area of support, now turned into resistance for a continuation to the downside. Does anyone in this whole entire universe know where the price is going to go? Absolutely not. So it is based on speculation, and it is based on understanding where the price is going to head next. So there can also be a scenario where the price breaks lower and then pumps all the way back into this range again, which fakes out a lot of investors. People think that, oh, it's broken lower now, let me just start selling, and then it just goes right back into this range. So make account for basically some sort of fake outs, and always know when the price breaks, it is legitimate, and when it breaks back, you want to actually enter your trade here or here. Not as soon as it breaks out. You want to wait for the pullback. You want to wait for a confirmation candle, and then you can execute your trade. That is the safest bet that you have. So for example, if you're trading the range, speaking from a risk management perspective, let's say you bought right here, and you said that I'm going to have my stop loss just below this level. So if we open the calculator, the position, like the order where you place your order, you choose your volume. So you can choose lot size, you can choose dollar per point, percentage per equity. So you're not risking 3-4% per trade. It basically sets everything up for you as risking 1% or taking 1% of your equity. So what I usually go with is lot sizes. And then I would look at the level right here. So we can see that gold is right around, let's say you bought at 18.19. Your stop loss, you want it to be below this level. And breathing room, let's say you put it at 18.10. So on a 300,000 account, if I want to risk 1% in that trade, I would basically choose my lot size. So from here, from 18.19 all the way to 18.10, that is basically $9 on gold, which is 90 pips. So if I go to so we have a position size calculator integrated into the platform. If you go to the plus sign up here and you type in position size, I have it as my favorite. From all the tools that we have, position size calculator is my favorite tool to use, because it truly gives you the accurate lot sizes that you can enter, and you're not over risking blowing up your account over one trade or a couple trades. So you go on your position size calculator, you choose the currency of your account. For example, here it is $1, and then you choose how much you want to risk on your account, plug in your account balance, 300,000, percentage or fixed. I'm going to always go with percentage And then for the instrument, we're going to choose metals, gold. So we said we're buying at 18.19 with our stop loss at 18.10, giving us 90 pips. If I'm risking 1% of my account, the maximum lot size that I can enter is 3.33. That is the maximum. So if the price goes 90 pips against me, I will lose $3,000, which is 1% of my account. If I'm not comfortable with losing $3,000 in a trade, which is 1% only, percentage talking, we can go down to 0.5%. And that drops your lot size. If we want to do 0.25%, that will give us only one lot. Meaning if it goes against me 90 pips, I will lose $900. So this is how you get accurate risk management. Let's say you were selling up here and you want your stop loss maybe above these wicks. So you're selling here at 1930 when it hits this level, and then your stop loss is at 1940. So that is 10 pips. Each trade is different. We go back again to the position size calculator, gold. Maybe it was 11 pips, kind of. And then if I'm risking 1% of my account, percentage, sorry, 110 pips, 1% of my account, it gives us 2.73 lot size. So meaning if the price goes all the way to here, I would lose 3,000, which is 1% on my account. So you always need to understand how much room you're going to give the price to go against you, because it could very well go up here and then drop all the way down to your take profit. And it could just go all the way up and trigger your stop loss. So you need to understand how much room am I giving and how much am I risking on the trade. That way you can have your accurate lot size before you enter, and you are not risking more than you want to lose. So risk management is one of the most important thing in this industry. And there's a saying amongst professional investors that the best risk managers are the best traders. And with Alex, so when you started trading, he came up to me and he told me about risk management. What sort of risk management parameters should I follow? And then I told him, based on your strategy, based on smart money concepts, ICT, when you decide what is, how far your stop loss is going to be, you need to calculate that with your lot size, and then you get that accurate risk management. And he can speak about his experience for when he started following accurate risk management and how well that served him. Alex, the floor is yours.
Okay, fantastic. Well, thank you so much for that, Mo. And this has been very insightful to see and be able to teach new traders about the proper risk management, and also showcasing one of the most powerful tools on a platform, which is the position size calculator. To touch on your question, when I first started trading, I used to do the same mistake where putting my stop loss way too close to my entry, thinking that I wasn't comfortable losing too much money, and I wouldn't calculate for market volatility, news sentiment. I wouldn't calculate for maybe it's a fake out, so I wouldn't give myself room, and then I could see the trade going in my direction because of that. So when I first approached you and I asked you about how I can start calculating, you said there's multiple ways around how to calculate your risk management. It also matters on the amount of capital you're actually trading with.
Yes.
It also matters how comfortable you are at risking, how much you are comfortable risking,
Yes.
and what is your risk to reward ratio. Based on my ICT and SMC approach, I have a 1.25. Sometimes I try to go for a 2-to-1.
Yes.
So I risk £1,000 to make £2,000 in the context. That's not always the case, but I try to be in that range. So based off that, you always told me to either risk 0.25 or 0.5% per each trade.
Yeah.
Meaning that if you do that, the reward, the risk is minimal. So you're not actually losing a lot on your account, but your reward is actually bigger. And you're also giving yourself room for any volatility and any market conditions that could, go against your stop loss.
Absolutely.
So doing that, I've seen an increase of my trades going from like loss, 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 going to win, win, loss, win, 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 because now I'm so much more comfortable or confident in increasing that stop loss just a little bit more.
Yeah.
Just like, oh, maybe if I increase it, maybe I'm going to lose. No, if you just increase it a tiny bit more
Yeah.
with the proper risk management of how much you're actually willing to put your capital at stake, meaning that a percentage of your capital is you're trading with.
Yeah.
It won't impact you that much because it's still the same. You're calculating still the exact same thing. It just matters that you're just protecting yourself for market volatility.
Absolutely. And that is that is beautiful. Thank you for sharing that
No
with
worries.
us. You've also mentioned something extremely important, which is how much are you willing to risk as a trader?
Yes.
So, you know, some people are risk takers, some people are risk averse, some people are very conservative in their trading. So it depends on you as a person, your risk tolerance. Each person has a specific risk tolerance. If you're risking too much all the time, you're going to mess up that risk tolerance. That is psychologically speaking. So when you're, let's say every trade you enter, you're putting in 10 lots. 10 lots on 100,000 account. If the price goes against you just 50 pips, you breached your account. So yes, you can enter 10 lots. You can enter 30 or 40 or 50 or 100 lots. But does that mean that you should enter these lot sizes with that sort of capital? Is that going to establish longevity in your trading career? Or is it going to be more inclined into gambling? At the end of the day, there are no restrictions on the lot sizes that you can use with us. We don't charge you commissions, so you can choose whatever you want. But we have all these advantageous features implemented within our platform to help you guys out. At the end of the day, you decide how you want to trade, how you want to risk, what sort of strategy you follow, but make sure that whatever you're doing is going to serve you 10 years down the line. If you think that this is a one hit, if I make it, it's either make or break, then you should stay away from the markets, because you want to take your trading performance over a series of trades, not just one trade. So I can show you basically my trading portfolio, and it's basically over years and years of trading. It's not, I don't base my trading and my success over a month, because I can have a losing month. I can have a losing week. Are you going to be able to stomach a losing month or a losing week? Or are you going to lose all the funds that you've generated? That is how you determine a good trader from a bad one, because we all have bad days, we all have bad trades, and then controlling your risk management will prevent you from engaging in revenge trading, over trading, over risking, all that stuff, which harms you psychologically over the long term. If you're revenge trading, you literally are revenge trading because you've lost money, and you want to recover that money that you've lost instantly, which leads to bad decisions, which leads to bigger losses. So every decision that you make is going to have an outcome. And that is trading. With trading, you can also understand so many things about your personality, about your fear, your greed, your risk tolerance, so on and so forth. So going back to these examples, I'm going to give another example on Forex, Forex pairs. But before we head there, I would like to
go some questions.
Yeah, let me just talk about this example right here. So we had gold on a rampage to the downside. So if we go to the daily, I want to touch on this recent thing that happened, this area. I'm going to draw a line.
God, I love that area. I love that.
Yeah. So this area, guys, this area acted as a strong support here, bringing the price all the way up, almost 870 pips. It dropped all the way back down and then created another massive move around 540 pips. These are all nice buying opportunities. And then it created here kind of a fake out for most investors. When it dropped here, so you see this high, and then it created a lower high. Sorry, a lower low, lower high. So here, if you bought here, you expected that the price is going to actually start rising higher and then go to your potential targets. So what a lot of people expected is to buy here and hold the trade all the way to the 2000 levels. And maybe we can see for selling opportunities up on this level that acted as a strong resistance many times here and here. So it's been like years where this area holds strong. What actually happened is people buying at this level when the price dropped back here, like, okay, so this can be potentially a triple bottom scenario and it's a strong level of support. Let me buy here. They bought here. That is fine. I actually also bought here at this price, 1885. My eyes were wide open at this level because, you know, there's nothing wrong. We all make mistakes. I bought here and I expected that we're going to hold this level. However, price dropped lower, triggering my stop loss, and I was out. I know people that held gold throughout all of this move lower. Why would you do that to yourself? When are you sure that it's actually going to stop here? Because it could very well go down lower and go below this level here. So we have a strong level of support right here. It could very well go below this as well. So when you have a stop loss, it actually prevents you from holding a trade and staying in hopes that it would go in your direction. A lot of people are trading based on hopes, based on emotions. Oh, you know, maybe tomorrow it will go back up. Or maybe the day after, and then you get this massive rejection to here. Now you're down quite a substantial amount, almost 300 pips or 400 pips. And then the following day, it doesn't give you that move again, and it goes lower. And now you're sitting in hopes for 3 or 4 days, dealing with all that pain of hoping, I hope the price goes back up. So you need to ask yourself, if I'm being hopeful about my trades, should I actually stay in it or should I exit? That's why a stop loss acts as a protection for your capital and actually helps you avoid going into the realm of hopes and, you know, wishful thinking. You don't want that. I've been there. Everyone who's done that mistake, I've been there. I know how you feel. And I hope in the future, you can actually implement things that will help you overcome hope, overcome, you know, revenge trading. Because, you know, and the other thing, it goes vice versa. You could see a lot of people that entered sell positions up here, perfect sell positions with a stop loss right here or right there, or even a tight stop loss. It doesn't matter. You know, it depends on your risk parameters, but you entered an amazing sell opportunity right here, but then you hold it for 10 minutes. You got out, missing out on this whole massive move. So you need to also calculate, maybe like hope when you're winning, hope for more until it reaches your take profit, and don't close it before it reaches your take profit. And then when you're wrong, just let the trade go to your stop loss. Let the trade play out, because a lot of times you can go and draw down, but then it reverses and it goes in your direction. If you don't have the patience for that, then develop that patience by executing smaller lot sizes, build the habit of proper trading, and then go on from there. So we'll take a break to answer some questions. Guys, write in your questions. Let's see the questions coming in.
So Matthew, so I'll touch up. So that was very insightful. Mo, thank you so much for that. So Matthew said, would you also consider risk capacity? By that I mean a trader may have a risk tolerance of 0.5 to 1% per trade, but as they open additional trades, the risk is compounded. Well, that's an excellent question, and both of us we can both answer that differently because we're both different traders. I personally, from me answering that question, is I wouldn't open multiple trades. If I were to open multiple trades, I would be risking less than 0.5 per trade, because I only have a 1% tolerance per day. So that's my safety net, and I don't really want to risk more than 1% a day. And then I know that with 1% a day, I can come back on track if I do have a bad losing streaks, which happens to our traders. So my the way I would approach the trading day is I risk 1% of my equity of my balance the whole entire day, and I trade within those parameters. And Mo, I know you'll answer that differently.
Yep. And Alex, beautiful answer for you for his question. So what would you consider risk capacity? By that, I mean a trader may have a risk tolerance of 0.5, 1% per trade. But as they open additional trades, the risk is compounded. So just to understand that I'm answering your question correctly, are you referring to when the price goes against you, you start adding more positions? Please confirm that in the chat if yes.
He said no.
No?
No, so he says basically that he's got a risk capacity of between 0.5 to 1% per trade.
Yeah.
But if he opens additional trades, does that mean that he's increasing?
Let's say you lost a trade 0.5%. The next trade that you enter, you're going to risk 1%. Does that seem accurate?
Waiting for Matthew to confirm.
So first trade.
Yes, he said yes.
Okay, lovely. I'm going to touch on both points because I've seen a lot of people do that. If you lose 0.5%, next trade, you lost 1%. Following trade, how much are you going to risk? 1.5? The following trade, are you going to risk 2? Following trade, are you going to risk 3.5? I don't think that establishes longevity in the market. So I see where you're coming from. I would much rather grow my account. And as I grow my account and have more room, let's say you're trading on a 100,000 account, 0.5% risk to make 1%. So you're risking $500 to make $1,000. Now let's say you won 3 trades in a row and your account now is at 103,000. If you risk, you can now, for example, take a 1% risk trade just because you've built up that room. If you lose 1%, you're down to 102,000. You're still in profit. If you lose another 1%, then you can test another 1%. If you lose another 1%, you're still up 1% on your account. But if you do 0.5 and then you do 1%, let's say you lost both trades, now you're down 1.5%, and then you do 2% or 1.5, or you double it every time. So you lost 0.5, 1, 2, 4. You could end, if you have a bad streak or the market didn't go in your direction in most of these trades, you could end up losing your account fully very quickly within a few days. And that is martingale basically in terms of risk. There's martingale in terms of positioning. So, and as you guys know, martingale is basically gambling. You basically enter a trade, let's say 1 lot, and then the price goes against you, and you put 2 lots. Price goes against you, you put 4 lots. It goes against you more, you put 8 lots. So you're basically going, as the price goes against you, you're adding bigger lot sizes until you technically breach. So if the price keeps going against you, you end up losing a massive amount. But if the price actually reverses and goes down, you will make a substantial amount of money. That is called martingale. And that is a gambling strategy. If you think about it over the long term, longevity wise, you will never be successful following that style of trading. You would be better off, opening a position based on a calculated lot size. A lot of people don't want to go the right way and they want the fast way. But here we only teach the right way of trading. You go basically the path of opening one position, you put your stop loss, and you set your mind to rest. Literally, set and forget. You don't want to look at the charts afterwards. It goes up, down, sideways, until it reaches your take profit or your stop loss. That is fine. Also, be realistic. You don't want to open a trade, set your stop losses and your take profits, and your take profit is at 10x. Just be realistic. You're trading. You're not investing. You need to understand that, for the first day, you could be up, for example, 2% on your account, but then the next day it could revert on you. So also make sure that you take your profits when you can. You need to actually build. When you're trading on these big accounts, you have to know how to build. and how to keep what you're building. Because if you're following 0.5% in every trade, it will take you 20 trades to lose your account. Are you going to be wrong 20 trades in a row? And if you were, at least you've done it correctly with proper risk management. I never enter a trade without actually, confirming. So every trade that I will enter, I will have a justification for that trade. If you can't justify the trade that you're entering, do not enter the trade. If you're just entering because I want to make 1%, I want to make money today, you would be better off not entering that trade. And I hope this answers your question, Matthew.
A little lecture there. So there's a few questions coming in, Mo. So there's some. Shem Emmanuel says, so based on the way you guys manage risk, my question is, what type of traders are you? And based on the type of traders you guys are, what's the lowest time frame you'll go down for an entry?
So basically that is when you determine what type of a trader you are. So I have an account where I only scalp. When I scalp, I'm using the 1 minute, the 5 minutes time frame, and that is basically way riskier than when I have my day trading account. I like scalping because I'm very passionate about the markets. I love this thing. I've been doing it for 10 years. If I'm not passionate about it, I would not be doing it. So I'm very passionate about the markets. I see what the markets can potentially do in day-to-day people's lives. It can really change it upside down if you're doing it correctly. So now I'm in a position where I can actually develop a scalping strategy where I'm trading the smaller time frames with tighter stop losses. But you need to understand that when you're scalping, you are susceptible to more mistakes than when you're holding a trade, setting it, and you're leaving it. And in the future, for next session, we may do a scalping session and then day trading session. We'll do both. That will be outside of our psychology sessions. Psychology will be every Wednesday. In the future, we'll have trading sessions where we scalp and trading sessions where we're actually doing longer term trading. So Shem Emmanuel, to answer your question, I'm gonna do an example on scalping. So we're gonna go down to the 5 minutes time frame. When I scalp, I do from the 1 minute to the 5 minutes. So if you, over that range that we've built up here, you can basically scalp that. So you buy down here and then you sell up here. You sell up here and then you exit down here and you buy down here and you sell up there. It's simple, straight to the point. Some people don't want to wait 5 minutes, 10, 20, 30, up to an hour, 3 hours, because that's going to be, could potentially lead to a daily trade. But what you can potentially do is enter, like you saw this bullish engulfing candle to 1, 2, 3, 4, 5, 6 candles in the past. And then you saw another pullback here, not going as low. And then it's followed by this engulfing candle here. So after this engulfing candle, let's say you decided to buy, right? You bought right here, and then you wanted to exit up here. Your stop loss in this scenario as a scalper is going to be tighter. So you're going to open a trade here. Your stop loss is going to just be below this level. So you're risking 30 pips to make 60 pips, 1 to 2. Your lot size is probably going to be higher, but that is scalping. And it could very well, you open the trade here, it could very well go down here, and then go back up. So, but if your stop loss is below this level, you're still fine. Similarly, we have another scenario right here. You saw this choppy price action movement. On the 1 minute, it will look even choppier. You don't want to trade that. Why would you be stuck, for example, in a buy position here and it wicks you all the way down, then wicks you all the way up, and then wicks you all the way down? You need to trade when there's clarity. So we saw this bullish engulfing candle to all that previous structure, very clean right here. You opened a trade right here and you're exiting right here on the neckline of the M formation. So on the neckline, you exit the trade. This trade, you are risking, you entered right here. Your stop loss is below this choppy price action. So you're risking 50 pips to make 50 pips, 1 to 1. each trade is different based on structure. You're doing the short term nitty gritty analysis. Everything counts. So I hope this answers your question, Shem. We're gonna move to another question. Speaking for myself, I had a shocking July, but managed to get back on track and ended September in profit. Very well done. Very proud of you. And I hope for more successes down the line over October, November, and December.
And January.
And more.
And more.
Yeah.
Harry saying, do we need to use the same lot size per trade? Or sometimes with high quality setups, can increase lot size? Is that good or bad?
This is a beautiful question, and I will answer that. But we have Tolga, trail stop on gold. Can we see how it works? Yes, I will show you how it works, but not on my funded account. I will go on another account shortly after. Let me go to another question. Harry, do we need to use the same lot size per trade? Sometimes with high quality setup, can increase lot size. Is that good or bad as per good trading? So Harry, what I personally do, I have rules for my entry, rules for my strategy. If all these rules are playing out, then I will enter 1.5%, because that is my risk tolerance. I am willing to risk 1.5% on my balance if all of my rule-based entry have been met. Sometimes I will find 80% or 70% of my rules met. That is not an A+ setup. That is basically a B setup where I will risk 0.5%. I want to participate, but why would I risk too much? And then you're going to have a setup where only a few things have been met. You can risk 0.25%. So it depends on you as a trader, and it depends on what account you are using. If I'm using a scalping account, I usually take these as A+ setup, B+ setup, B setup, and C setup. The C setup is going to be the lowest risk. I'm just in it to see if it's going to give me something. And if I lose on it, it's going to be a very small amount. An A+ setup is a setup where I'm risking a good portion with a calculated stop loss way far away from my entry, and then I'm going to let it run. And you don't get the A+ setups all the time. The market is usually going to give you B's and C's. But when you get that A+, that is when you're confident, because it's all of your rule-based entries being met, and then you can go on and take that trade. And that's how you exercise good risk management. For each setup, you're going to have different risk management parameters. For my day trading account, I only search for A+ setups. And I'm willing to be patient. I'm willing to sit out for 2-3 days and not open any trades. Like, I'm just sitting there waiting for the market to give me what I want, not what they want. When it gives me what I want, with all of my rules being met, A+, I'll enter. If I don't have any of my rule-based entries met, no trade for the day. Even if it gives me 90% of my rules, but then there's that one little thing that is missing, there's no trade for the day. I'm very strict about it. So, sorry, I was quickly trying to type as you asked for confirmation on question. I meant by having one trade open and my tolerance is 1%. That's a total 1% risk to my account. If then enter another trade at my risk tolerance level of 1%, I'm now risking 2% of my account. Yes, and that is the right way of trading. If you're risking 1% and your risk tolerance is fine with that, you can always just do 1%, 1%, 1%. Let's say you open 10 trades, only risking 1%, following your rules, following your trading plan, which is what we've discussed over 3 different psychology sessions, the importance of a trading plan. Let's say you're risking 1% every trade that you enter. And you took 10 trades. 5 of them were correct and 5 of them were wrong. 5 multiplied by 1%, that is 5% loss, and 5 multiplied by, let's say, 2%. Now you're up. You made 10%. If basically simple subtraction of 10% minus 5, you are up 5% on your account from losing 5 and winning 5. Even if you win 3 and you lose, let's say 7, 7 multiplied by 1, that is 7%. 3 multiplied by 2, that is 6%. So you're only down 1% and you've lost way more than you've won. So it's really important that your risk management is on point to have longevity, because sometimes you're gonna have the reason why I'm not inclined with the 1% risk. I'm more comfortable with 0.75, 0.5, 0.25 is because if I lose 5 trades in a row, I'm down 1%, or 4 trades in a row, I'm down 1%. If I'm doing 0.5% and I lose 4 trades in a row, I'm down 2%. That is easier to stomach. And if you win 1 trade, then you're back on track. You just have to think about it from, okay, I'm risking this much to make this much. And this is my lot size. This is where my stop loss is at. Everything has been calculated. Then you can go on and, trade with comfort. Your position calculator makes the trade so much safer. Daniel, thank you very much for that. I appreciate you sharing that information with our members. We have Jose. Can we put the news in the chat? There's a command on that. Is there a command on that? Okay. So for the news on the chart, you can go to the calendar, straight to the calendar. You can understand what is happening on the day. So we've showed you guys the other day where you can see low impact, high impact, and medium impact. If you filter these out, you'll be left with high impact news. If we click on high impact news for the day, you can see that we have, President Christine Lagarde had a speech at 5 p.m. You got ISM Services PMI, which was previously at 54.5. The actual data today came out to 53.6. It was forecasted to be 53.6. So the market did not really react heavily to it. As you can see on sterling, dollar, it did not move a lot after the news. You've got ADP employment change, and it gives you a description about all of that. So to answer your question, if that is possible, no, but we can speak to our developers to kind of have that option available for you in the future.
You can also leave suggestions in the Discord channel as well, where we will be able to we'll sit and take all of your suggestions and be open to maybe making any changes that are beneficial.
Absolutely.
Matthew, I just saw your reply back to the question that I replied to you. Makes a lot of sense, and assume that you're only planning to enter 1 trade means that you're very selective, which will support your analysis. Yes, correct, Matthew. I am very selective of my trades and when I enter trade. So it's only because I like to be conservative, and I also just want to have more wins rather than losses. So I am very selective on when I enter the market. So I look at making sure that it hits all my daily checklists, making sure that it's trading within my range, it's supporting my signals, it's supporting my tactic. And if it is, then that's when I'll take the trade, and I'll only risk 1% in total for that day. So if I take 5 or 6 trades that day, but they're lower risk, but I have a higher reward, then that day would have been profitable. So absolutely, that's my advice to you, is to just make sure that you stick to a percentage that you're happy to lose in a day, your percentage, your risk capacity, and just stick to it and just make yourself disciplined in that sense.
Yeah. So before we carry on with the questions, I will answer all of your questions, guys, even if the webinar takes a little bit longer than 1 hour. But just to remind you all, guys, we have webinar 30 code. If you want to apply it on your purchase, it will give you 30% off, and it will be only valid until 12 a.m. That is webinar 30. And going back to your questions, guys. So we have Dexter, scalping using minute 15, then using indicator pivot points. Is this possible? You can use whichever indicator works for you. If your strategy involves pivot points, and you use the minute 15 for execution for your scalps, that is absolutely fine. You can do that. If that works for you, carry on doing what works for you.
No, sorry. There's a lot of people saying that they want to find the position size calculator. A lot of demand for that. Could you just showcase them that as well?
Yes,
Again.
I will go back to show you guys the position size calculator. Let's go through the questions because we have a lot going in. So we have Michael Ma. As a scalper, if you lose 1% of your account per day, should you stop trading for the day? That is a decision that you make for yourself. So as a scalper, losing 1%, I would say when you're a scalper and you're losing 1%, that is quite a lot. Because as a scalper, you're probably going to execute multiple trades throughout the day because there's no point in scalping if you're not taking, let's say, 10, 15 trades a day. I know scalpers that take 200-300 trades a day. So, it depends on what type of scalping you're talking about. Because if you're taking one trade a day, you're more like a day trader. And if you lose 1% as day trader, that is fine. You just move on. Next day, hopefully, will be better. I hope this answer your question. And you've got James Khan. Could you show me the calculator again? I will show that to you. Could you share where to access the position stock calculator? Yes, I will do that for you, Mary. Not part of your prop firm, but from what I see, I like the way the trading platform looks and operates. Thank you very much, Jim, and we hope to have you on board with us. We have, please explain about this webinar code again. So Harry, if you are interested in purchasing a challenge with We Fund You Trade, we are giving an exclusive 30% discount for the members in the webinar. So on your checkout, there will be add a promotional link. You can simply just click webinar 30 and it will give you 30% off on whichever challenge you decide to purchase. The webinar 30 code just shared. What is this for? It is to purchase a challenge if you're interested in that. And thank you very much for your question, Paul. And to go back to show you guys the position size calculator. So there's this little plus on the top. You've got the dashes where you have access to your dashboard performance, to see your challenges, account history, etc. And you've got this to open the ticket order. And then you've got a little plus sign right next to it. So if we click on the plus sign, we go to, you can search for position size calculator. I have it starred as my favorite tool, and then you can click on that. So to use that, we can choose the currency. The currency of our accounts, all of us, is dollar. Percentage or fixed, always choose percentage because you are risking a percentage of your account. For the US dollar, you plug in your account balance. So if you're trading on 100,000, you just put in 100,000. And then for the instrument, you just click on the instruments, choose the asset that you're trading, whether it is FX majors, minors, exotics, commodities, stock indices, or metals. In this example that we gave today, we were talking about metals. So it was gold. For the stop loss type, pips or price offset, always choose pips. That's what I'm used to. And then once you've done your analysis, let's say you've done your analysis here, we said that you wanted to buy right here, your stop loss is below this level. From here to here, that is 45 pips, say. And then if we go back to the calculator, 45 pips. If I'm risking 1% of my account with 45 pips on a $100,000 account, the maximum lot size I can enter is 2.22. If I want to risk 0.5%, it will be 1.11. So for a person who's scalping, buying here, maybe exiting up here, this tool can be handy. For someone who's day trading, position trading, whatever type of trader you are, at least you can understand how much you're risking on your trade, what is the lot size you can enter, and then that way you're not entering a trade with 10 lots, another trade with 35 lots, another trade with 7 lots. Every trade is a different lot size, absolutely, but it's based on where your stop loss is going to be. So whichever percentage you choose with the pips in stop losses, it will give you the calculation of the lot size you can enter, so you can understand how much you'll be losing. Going back to the questions, we have, I particularly like the percentage of equity option when placing a trade, which is an alternative to using the position size calculator. If placing trades on the platform, is it worth showcasing that to the audience? Gregory, thank you very much for that. Yes, I absolutely agree with you. So if you do percentage of your equity, you can also save your template up here. So it's always set to percentage of your equity every single time. You can select 1%, go up here, save your template, and then that is saved. Every time you open the ticket order, it will automatically be set to 1%. So for the stop loss, you just select, for example, 40 pips. And then for take profit, let's say 80 pips. You choose whether you are a buyer or a seller. And then if you're buying right here, targeting these highs with your stop loss down here, let's increase that a little bit further. So now we've made that 54 pips to make 80 pips, risking 1% of my equity, which will basically make us lose 3,000 to make 6,000. And the lot size that it will enter is 7.5 lots. You can also change that to, for example, 0.5, where I'm risking 1,500 to make 2,000. And that is the lot size it will enter, 2.77. I hope this explains it. And we'll take a couple more questions. I have an issue when I have to reboot my laptop. I lose my chart settings. What do I need to stop this from happening? You can book a coaching session, Mary, or to answer your question, just go to here, and then once you've done your analysis, you've done all of that, you can go to the indicators, indicator studies, and then save it. That way it will save your template every time you want to trade. So for example, I have saved 2 templates. If I want to pull up this template instantly, I can just simply click on it and it will open up.
Boom.
Exactly everything. So I have my moving averages, I've got my RSI, my volume, and then it will open up all the tools that I typically use.
We're getting a lot of questions about the platform, which is fantastic. So it shows a lot of interest and demand, which we'll definitely touch up on this on the upcoming webinars that we're doing next week. And we'll also be doing some content creation this week and next week to showcase some of the important tools that we actually have compared to our competitors out there, where we actually do care about making sure that you guys understand things such as a position size calculator, the trail for the stop loss, so you which we can touch on. That's a whole other thing that we have to touch on, but we do try to make it as easy and as understandable for each trader to just enter the markets, look at a chart, and be able to be like, okay, I can either risk 1%, or I can risk 0.5%, or I can risk lot sizes or pips or points, which is a bit more technical, but the options are there. So that's a fantastic thing to have, and it's one of our proudest tools, I would say. Here we find the trade, but yeah. So a lot of people are saying how they're saying thank you for the platform. If you wanna book a coaching sessions and get more tailored coaching sessions and get more in-depth analysis of the dashboard, you can go over to our website, which is WFYT.com. And then you'll be able to go over to the events section and book yourself onto your coaching session on the website. Or other than that, if you don't know how to do that, you can just reach out to the live chat staff and they'll be more than happy to book you in with one of our coaches.
Guys, remember, sorry to interrupt.
Yeah, no, I just wanted to say that,
Yeah.
I mean, Shaq said the fantastic bit of a positive message here. I don't know if everyone else saw it. He wanted to share a word of advice to his other traders. If you made a big loss, stop trading for the day, which me and Mo both stand by.
Yep.
If you made a loss, if I make a loss, I stop trading. If I hit my stop loss, or if I hit my risk parameters of how much I'm losing for the day, I stop. I do not try and revenge trade
or overtrade. There's no need to do that.
No need. There's the money is there. The markets are there. The markets are not gonna die. The markets ain't gonna move, ain't gonna disappear. The money ain't gonna disappear. It's all there. You always have the time. You can always come back tomorrow or the next day or next week. That's why we have unlimited time to be able to give you the opportunity to step back in. So if you had a massive loss, just go bit by bit. A saying that I like to say is it's either day one or day one.
Yeah,
Oh no, day one or one day.
exactly.
So you want to be day one instead of one day. You don't want to delay it. You want to just start today. Just maybe make 20%, maybe make $20, $40 or $50 profit per trade, but just build it up slowly and gradually, and that will get you back up onto a safety net where then you can start trading back to your strategy.
Absolutely.
I'll just read his message for everyone else saying that even if you have to build back by $500 a day, it's fine. Remember, these challenges have unlimited time. Exactly, there's no rush. So to our mentors, thank you for this session. It has helped with my psychology a lot. That's I would take that as a compliment. That's been fantastic. So thank you so much for your positivity and for everyone's being here.
Yeah, I have to show the trail stop tool.
Yes, you do. Yes,
because
yeah.
Tolga and Prashant are both asking about this.
Yes.
Yes. So with trail stop, guys, do you know, first of all, you have to know how to use that. Let's say you opened a trade right here and you bought basically right here. I will show you a real life example. Let's go to this. So now we're not on the funded account, so we can show you how it works. Basically, with a trail stop, let's say you are selling right here. I will go to lot size and then do 1.5 lots. Stop loss gonna be up there, and then take profit is gonna be 60 pips. I have just sold. If the price goes in my direction, I can just simply click on my position, and then you usually use it when the price has already rallied in your direction and you want to secure your profits. So instead of having a 30 pip stop loss, I can just do a trail stop by 10 pips. So meaning that as the price goes down, your stop loss is chasing it 10 pips away. If the price suddenly starts doing a pullback with 10 pips, you get stopped out in profit. But so now we sold right here. The way you do your trail stop is when the price is already, like, let's say down here at 18.16. So you do 10 pips trail. That way your stop loss will be right there. If the price decided to revert back from this area, it will just simply go up and then stop you out at 10 pips rather than, get stopped out there. Or you can close it manually. So you only use a trail stop when the price have rallied in your direction quite a decent amount. And then to secure your profit, you can remove your initial stop loss and then do a trail. So if I do a change, now I have a trailing stop. My original stop loss has been removed. Have a trailing stop up here. Of course, I entered right here, so it's not very smart to do it right away. But if the price now goes against me 10 pips, it will close me out at 10 pips. If it goes down to here, this trail will be following it. And I hope this answers your question. So this answers Tolga and Prashant's questions. We have, can we choose dollar amount instead of percentage of account? Yes, you can do that, Elma. So if we go here, you can go to lots and then you can do dollar per point. So you can choose how many dollars you want to lose. Let's say 1,000.
And it calculates it.
And then it calculates everything right here.
That's per point. So that's a 30,000.
Yeah, that is
that's
$1,000 per point.
Yeah,
so if you exactly. So if you do, for example, you want it to have $100 per point, it'll show you 10 lots basically with 30 pips stop loss, 60 pips take profit. It gives you all the options, and you can also do the same thing with your stop loss. You can do the same thing with your take profit. Our platform is created by elite traders in the industry with years of experience in the banking industry, investing in hedge funds. So they had in mind all types of traders and how people trade. They kept in mind to have all these tools implemented to help you guys out there. And on top of that, we also do offer coaching sessions, these psychology sessions every week. And we're going to host more trading sessions where we show you how we trade, how we scalp, how we day trade in order to help all of you guys out there. There's no company out there that is doing the same thing. At the end of the day, we want to help you win your challenge. We want to help you succeed. Just get in touch with our team whenever you need any help. And we're going to get 2 more questions, guys, and this will basically finalize the session for today. How do I book a coaching session? I will show that to you guys.
That's already been answered, I think. So before we answer, if there's any other questions, we just want to get some feedback with you guys in the chat to see if you guys actually enjoyed the session, and if there's anything that you want to see us do in the future, or you want to see anything specific from We Fund You Trade. We always like to listen to our traders and listen to our listen to our traders, not clients, listen to our traders, and be able to tailor the experience here We Fund You Trade to the traders. So yeah,
just before we go, James, great learning today. I like the platform a lot, but I've used this so far, and I've used so far, and tools. Thank you very much for your kind words. Is there a stop loss break even tool? Yes. So what you can actually do, if you enter a sell position right here and you click on your position, sorry, not on the position itself. If you click on these little tools right there, you can choose partial close, or you can choose a break even exit. Instead of changing everything, you can just click break even exit, and if the price goes back to break even, it will stop you out. And to get the last couple questions, thank you guys so much. All right, I hope this explains everything. How do I get this page? Only have MT4. So when you go to the email, when you've purchased your account, there will be log into the platform. You just use your email and the password provided to you, and then you get access to this page. Once you get access to this page, you will have your performance dashboard. It will show you that your daily loss limit, your maximum loss limit. The daily loss limit changes every day, and it will even show you your best trade, worst trade, average, win rate, plus the percentage of your win rate, plus so many other things. You can also create your own page, just like what I've done here. So make sure to take advantage of our coaching sessions where they walk you through the platform and show you how you guys can use it to your own advantage. This sums everything up for the day. I hope everyone benefited from this, and we hope to see you guys in the next session. Stay tuned for our announcements on Discord. Keep an eye out on your emails for reminders. I want to thank every one of you guys. Make sure that you use coupon code webinar30. Join the Discord. We wish you all the best of luck in your trading days ahead. Tomorrow, next week, until the end of the year. And thank you for being part of the We Fund You Trade community. Thank you for your time today. See you in the next one.
Thank you guys.
Cheers.
Take care. Enjoy.
Goodbye.
Good evening. Bye-bye.